Alrighty, what is good? It is January 4th, 2024. It is Thursday for the first trading week of the year, so we are almost coming to an end. I do want to say it is NFP week. So, with that being said, I have personally been very, very, very picky about these setups I'm taking, especially after Wednesday AM session, which was yesterday. That is why I only took, I believe, two setups today. One was a TP break even, and then one was a 12-point winner for me. And then after that, I kind of just tape read for the rest of the session, headed to the gym, got a nice lift in, and then came back for PM session. I actually took a trade that I'm going to cover on here and kind of explain my thought process. I do believe technically if you're using the 1 minute with my scalping model, I think it would have fit within the rules. This is just a little bit of a inversion paired with a market maker sell model. But with that being said, I do want to go ahead and cover AM session. There were a couple examples that people wanted me to cover on Twitter. I'm going to look for them here in a minute, but I do want to go ahead and go over just the base stuff first. So obviously 8:30 right there, market open, and 8:40 our opening window. There was a trade that I took before 8:40 because I like the volatility. We had 7:30 news, obviously, and then we had this little accumulation of manipulation right here. So I was expecting upside this morning, but once we came up here and hit off this -1 standard deviation, I was like, all right, I think I could come trade this back into the range a little bit because we did put some equal lows in right here. So my thought process right here was, obviously, we broke this low, had our little fair value gap entry, and I do believe there was something on the 5 minute or the 1 minute. I can't remember. I think it was a fair value gap or something that I used it off of. But with that being said, obviously, we broke that low, had our scalp entry right there. This one was a TP break even. It immediately dumped after I got my entry, and I went break even, and it did come up before going 18 points. It's pretty unfortunate, but it's part of it. It's just something you got to accept with this model is you're going to have TP break-evens that will go to full TP, but more times than not, it's going to save you. You got to trust me on that. But getting into the next one, this one should not have been taken, but if you did, you still would have been fine. It would have been a TP break-even, but if you're asking why, we have these equal lows residing down here. I'm expecting those to be a draw. So this one obviously should not have been taken, but still would have been fine, would have been a risk-free trade. But like I said, always keep that in mind. And I believe this one obviously not valid because we have open fair value gaps below. I'm just trying to mark out everything and explain why stuff would be invalid instead of just showing the ones that are valid, because I think it would help y'all learn it a little bit quicker. And then obviously this one, per my risk tool, this is technically still a winner. I'm not sure because it's like one. Look how close this is. This is super close. But personally, this is where some discretion comes in, is when I see us dumping like this and we have this obvious low just resting right here and we put in a low, like, what's that, probably 2 points away from it. That's just engineered liquidity. I'm waiting for that to get actually swept before entertaining anything. But had you have gotten in on this, you should have been fine. Like I said, based off of my risk parameter tool, obviously, for the setup, we broke that little high right there, even though we were still respecting this, not a 1 minute fair value gap, but a 15-second. There was nothing on the 1 minute. The only 1 minute fair value gap was this yellow box right up here. You should be able to see it on my screen right over here. So we did have a little bit room to go up into that. But that is personally why I would not be taking that. Obviously, with that engineered liquidity and being NFP week, I'm already going to be super picky as is. So I'm really only focusing on taking A++ setups. Had we have maybe in this scenario already taken liquidity right here, like say this setup formed like right somewhere over here, that's perfect. But when we do this, not a big fan. And then kind of going into the next setup, we were approaching the -2, -2.5 standard deviation, which is this gray box right here. This was the actual second trade I took. We did take some, I think this is the opening range high over here, New York AM high, or not opening range high, but it was a previous high over there. I was kind of until we got some clean displacement. I was waiting to see, once we had met that point, I was like, all right, I'm going to see what market wants to do here. If it wants to continue down lower, I'll maybe, and start disrespecting bullish PD raise, I'll maybe entertain some shorts or some scalp shorts. But we started to push back up. I was like, all right, likely market is going to want to draw to other liquidity points. We did have some equal highs resting right up in here, right inside of this -2 and -2.5 standard deviation. So when I saw that, I was like, all right, this is a no-brainer trade. I'm honestly surprised this even digged that much deeper down into here. I thought more so it was just going to absolutely rip up. But using my 1 minute, what are we respecting right here? Obviously, we wick down into this 1 minute fair value gap and displace off of. This is technically, like I said, my A plus setup. When we displace off of a fair value gap on the 1 minute, my high time frame, and get a scalp setup soon after, bread and butter. I do wish this one would have been the entry, but hey, we still got a clean little setup right there, and I can't complain. So obviously right here, we broke this high, clean displacement above, left a little fair value gap up here. No equal lows, some close relative ones, but nothing dead equal. So obviously this would still be valid. And just so happened that the 12-point target lined up perfectly with that liquidity level. So that, like I said, was the second trade I personally took. Once I got that, I was like, all right, I have secured enough. I'm going to be done for the day. I am content with my profits, and I'll just tape read the rest of the session. So getting into the next one, like I was saying in my video yesterday, we do, actually I want to explain this real quick, or not explain it, but show it. We obviously have this baby little fair value gap that we repriced off. We still do have this big one, but per my rules, if the most recent ones repriced off, that's all that matters. But like I was explaining in my video yesterday, what do we have residing down here? A 1 minute bullish fair value gap. When we come down and wick it like that right there, as the scalp setup's presented, that's something I'm not going to entertain. That's a very, very low quality setup. As you can see, it still did pan out. It didn't go 12 points. It went 11.5. But this is like my focus and your focus should be on taking the highest probable setups, the ones that are going to yield full take profits. You don't want, it's not bad if you're getting a bunch of TP break evens, but my goal is to not have many TP break evens and have the 12-point, the 18-point winners with my scalping model. And that's just going to come once you get some more experience with it. You'll be able to recognize the setups that are quote unquote unprobable compared to others. More so, I honestly really like anytime I say my A plus setup, a lot of times it will happen a lot. That's going to be my, like I was saying earlier, my bread and butter. I will take that 9 out of 10 times with no hesitation. Really, honestly, if I even have to put any thought into the setup about like questioning it, that's honestly kind of immediate telltale sign that it's going to be an unprobable scalp setup. But with that in mind, I still do want to cover this one. This one would have been a TP break even. Obviously, we were still holding this 1 minute bullish fair value gap up here, so we could deem price as, or is in a buy program. Obviously, we did break some structure on the 1 minute, but once I saw this reaction down here and no follow through that fair value gap, pretty clear price is still in a buy program. So obviously right here, we do have this little fair value gap down here that we repriced off of. And then we displaced off of it, got a scalp setup right here. This one would have been a TP break even. It did dig pretty deep down in here, but didn't come to the stop, so we were good there. And that did go 9.75 points. So yet another TP break even. And then this was one I believe someone had a question about on Twitter. They're asking about this setup, or maybe just some people straight up took it. Here's what you need to ask yourself. I always say, get yourself in alignment with what the 1 minute is doing. If it's respecting bullish PD raise, seek scalp longs, right? If it's disrespecting bullish PD raise and respecting bearish, seek scalp shorts. I think I said that correct. I don't know if I just mixed that up, but you get the point. So in this case, what do we see? We're still holding this, right? And we get this scalp setup presented right here. Although we do have some, I would technically deem those as some equal highs. But besides the point, I want to get this main point across. When price is respecting bullish PD raise, seek scalp longs. Don't try and catch every single damn move. You don't need to. You can take one of these a day and be wildly profitable. Wildly. That's 1% a day. There's 252 trading days in a year. If you can consistently do that with an 80% win rate, that's over 200% return in a year. Put that into perspective. You don't need to come in here trying to catch 10, 12 moves. You're just going to drive yourself insane. Okay? Like, honestly. But besides the point, like I was saying, understand what is being respected and what is being disrespected. In this case, I would not even think about entertaining this setup, if I'm being completely honest. Took out some liquidity right here. Price is in a buy program. What's it going to do after it clears out some liquidity? Continue in its intended direction. Price, obviously, I'm going to zoom out and go over the standard deviation because I'm telling you, that's your roadmap, in my opinion. It's not needed, but if you want precision and knowing when and when not to be in the market, highly, highly recommend. But besides the point, right? Obviously, over here, we're still respecting bullish PD arrays. We get a little scalp setup presented right here. We did reprice off of that fair value gap, reprice off that fair value gap. No disrespecting it, no clean closes below any of them. Even on the 1 minute, we were still obviously displacing up. We broke this little high right here on the second candle barely by probably about a point-ish. And then we would have got, even though there was another one up here, we still would have got tagged in on the second candle, which is the most important part, in my opinion. So obviously we would have been tagged in right there, would have only taken 1.75 points of heat before it did go up to 612, not quite 18, but still a good winner right there. And then yet again, on this next setup, same thing again. We repriced off of this little fair value gap down here. Displaced up, got a little scalp set up, tiny fair value gap, like minuscule right there. We would have been tagged in. This one would have been a TP break even. Did go 9.75 points before reversing down and stopping us at break even. And before you ask, I just noticed this too. This, if you had missed that trade, right? Let me zoom out a little. Ooh, did not mean to do that. Did not mean to do that. What are we continuing to do here? Put in higher highs and put in lower lows, right? This would be illogical to take. Just being completely honest. Even though it looks enticing, we have so much liquidity just resting up here that that's like the biggest thing. I think is just understanding. I do add like key liquidity points in, just because it gives me a framework, just as the standard deviations do. But again, it really just comes down to aligning yourself with what the 1 minute is respecting. What are we still respecting here? Bullish PD arrays. We just came off of this order block right here, for Pete's sake. CISD right here, change in state of delivery or continuation in state of delivery. But besides the point, we're still respecting bullish PD arrays here. And until we get confirmation that it's being disrespected, you should not be seeking anything against it, in my opinion. That's just what I think. And especially when conditions are I wouldn't say really improbable, but delivery is sloppy, that's when you got to be very, very cautious. And if we were getting clean movement and weren't just, I maybe would have entertained this because there was some room for it to come down to this. Actually, I don't know if there was room. No, there wouldn't have been room. Let's measure it real quick. This is like what I was saying yesterday. There's got to be enough room for it to dig down. Right here, we only have 8 points until that. I'm not trying to catch 6 points and then be immediately stopped to break even. That's not my goal, because that's just going to affect your trailing drawdown. Honestly, that's the major part. But again, that one, just as I was saying yesterday, not enough room. Even if you try to force this, that should have been your sign automatically there. Scratch all the other stuff. There's not enough room for it to reach at least 12 points. Disregard it. Simple. Simple stuff, my friends. There's no need to overcomplicate this. And I believe, 10? We did get another clean little one right up here. This was a very, very key liquidity point. I don't remember. I think it was a session high. Or no, actually, it was a 4 standard deviation. But we did actually have a London high over here, too. It was right above the 4 standard deviation. So with that in mind, obviously, price, what are we still respecting? Bullish PD raise. We're continuing to displace higher. So obviously, in this scenario, I'm going to want to seek scalp longs. We reprice off this fair value gap. IO fed it, and then displace above these highs right here. Have our little scalp set up. And this one did only take... Did come back down into, yeah, that's a 1 minute fair value gap. 3.25 points of heat before we did go up. Again, this would have been a TP break even. I went 10.5 points. Like I was saying, not expecting much on a Thursday before NFP, but I mean, it still yielded quite a bit of setups. So even then, always got to keep that in mind. And then obviously this one, we were still above this 1 minute fair value gap. Hadn't displaced through it, hadn't closed through it. No disrespecting bullish PD raise. So I'm going to be seeking scalp longs. And then we have this little high put in, this little swing high right there. We displace above it. We did actually take out this little liquidity point right here by like 2 ticks. Displaced above. And then this one also went 9.75 points before our 10:30 window. So like I said, that should kind of put into perspective that like in scenarios like this, it's best to be able to recognize when conditions are improbable. When we're just chopping around like this, not getting clean, smooth movements up, that's kind of your sign that you need to be cautious and be wary on what setups you take and make sure they check all the boxes. And I do want to go over the standard deviation thing real quick because I'm a big fan of it. Like honestly, and I'm trying to make this as simple as possible. I'm just gonna go to 5 minute to make it easier to draw, and then I'm gonna cover the PM session trade. So right here, this is about, I think, probably as simple as you can explain this. Obviously, we consolidate right here. We come down, right? Take out these relative equal lows, and then immediately displace up. We have our little change in state of delivery after we close above these down close candles after taking that liquidity. This is really just a power of 3, right? We have our accumulation, we have our manipulation down here, and we have our distribution up here. That makes sense? So with that being said, what you need to do for standard deviations is identify the manipulation leg. Right here, this low, why did that do that? This low to that high. That's your manipulation leg. From there, you just mark that out, and boom, you have your levels. You can see price respected the -1 standard deviation to the tick, came back down, took a play off of that. You can see up here, we came up to -2, -2.5, displaced down off that, and then traded back through it. Almost came up to the 4 standard deviation with London high right above. Honestly, if I had to really take a ponder guess, we're saving that tomorrow for NFP. I'll come back to this and see if I was right, but if we don't get some crazy movement in power hour, which I don't think we will, it's maybe kind of what I'm expecting tomorrow. We'll see though. We will see. And then I do want to go over the PM session trade because it was kind of cool. Not gonna lie. It's not. First thing I want to do is I want to see if it was, because I wasn't really looking for I usually in PM, I don't really look for my scalping model. That's more so an AM thing. Just because, yeah, that's just how I like it, honestly. So actually, no, this wouldn't have fit within the rules of the 1 minute or the scalping model because we had some equal highs up here. But my thought process right here, I'll go over to the 5 minute real quick over here. Right. So 5 minute, I saw this set up off this fair value gap after we displaced, but I wanted to see a little bit more confirmation that we wanted to move to the downside. And then once we closed below a couple clean candles below this 5 minute fair value gap up here, obviously that turns into a inverse fair value gap. And I'm expecting that to support price down. And to me, again, here I used standard deviations. Let me bump down to the 30 second. So obviously right up here, this is the manipulation leg. We mark it out low to high, project our standard deviations, and you can see how price respected where it did, right? We came down to the 1, reversed a little bit, traded back down. That's where actually once we came off that and came back up into this 5-minute inverse, that's where I took my entry right there. And I believe, I'm going to measure it in a second because I know where I put my stop placement. I'm not sure how many R it was, but I'm pretty sure it was like pretty high. But besides the point, this is just a market maker sell, a low time frame market maker sell model paired with a 5-minute inverse. It's a pretty cool trade. But I do want to mark this out because I took it right here and then I have my stop, I believe right there. 5.38, not too bad. So yeah, that was the review for January 4th, 2024. I believe I answered the questions that were asked on Twitter. If I didn't, just shoot me a tweet or comment on this video, and I'll try and give my input on it. But as usual, if you have any questions, just let me know, and I'll catch you on the next video. Peace.